You're watching Wall Street Confidential on TheStreet.com TV. We're seeing a minor trend in the Nasdaq and a major trend in commodities. And Jim, when we have the Nasdaq versus the commodities, where do you stand?
Okay, Brittany, one of the things, and we can use this as a great metaphor, one of the things that I've learned, and a lot of times I come in here, I talk about what I've learned, and why do I do that? Because I was successful. Well, how do we know I was successful? Because I had a record. And I point all this out because I think that if I didn't have a record over a long period of time, I wouldn't know why I would listen to me myself. So we have to say, when I say one of the things that I've learned, I learned it from trial and error. I learned it from losing money. I didn't learn it from a book, and I didn't learn it by watching Warren Buffett, and I didn't learn it by seeing people talk on TV. I learned it from hard knocks. And what I learned was you always want to sell the minor trend when it rallies and buy the major trend when it sells off. It's very clear when oil went from 138 to 120, which was my short-term price target before it goes to 150. It went to 121. It didn't take out 120. That would have made it easier for me because I think I would have pulled the trigger on more than that gas. But I was mesmerized. I sold BP at 78 and went to 68 so fast. There was nothing I could do. But I would emphasize to you that when the major trend like oil goes down, you buy it. And the minor trend, every time oil goes down, people buy tech. Well, this is because people are looking for stocks that can outgrow a slowdown. They think a decline in commodities indicates slowdown. And all of that is a false premise to me. So what do? I say, okay, I think the major trend is higher commodity prices. I remain that way, whether it be food, agriculture, Monsanto there, whether it be infrastructure, whether it be oil and gas, minerals. I clearly believe that the major trend is up in those. The minor trend, the semiconductors, National Semi today, great sale, I think. Sienna, when it got to 32, great sale. Cisco, great sale right here. Intel, really good sale right here. The minor trend of tech going up, it is not based on anything. It's based on prospects. And that Semi said things should be better going forward. That's what Texas Instruments has been saying over and over again. I see no, I see absolutely nothing that makes that judgment have any credence at all. So what I do is say they gave you lift, bail, okay? Where the difficult part of the market is for me is the Cloroxes and Colgates. They're so in no man's land, and they become so linked to higher oil prices that people reach for tech when they say, okay, well, listen, the quarter's going badly for Procter because of oil. Like, they've made that presumption. But tech doesn't use a lot of oil, so therefore it won't be bad. And what I remind people is that tech is a GDP play. And if you think the gross domestic product is slowing as I do, you don't want to own tech.
So why is it that people get these confused?
I think that there's a lot of legacy. Brittany, I think a lot of people remember that tech always comes back. This is what happened for many years with the drug stocks. If you take a look at the Pfizer decline from 35 to 17, 18, you will see at every level people recall Pfizer as being a great stock, Wyeth as being a great stock, Lilly. It's very hard to shake that view. And it's very hard to shake that view because certain people came of age during a period when the drug stocks were great. Certain people came of age from the period when tech is great, 1994 to 2004, and 2005 probably. And I didn't. I came of age in 1980, 83 when oil stocks went up every day, and the oil became a bigger and bigger piece of the S&P. It is that background that allows me to see this market for what it is, which is a good market for the major trend.
Okay, thanks, Jim.
Thank you.
Stay tuned for more Wall Street Confidential on TheStreet.com TV.